Welcome back. You're with Money, Money, Money. It's the festive series, and this is the property market special. So, Ghulam, I totally get your point. I mean, you've put out the caveat saying, think about whether you want to look at property as an investment or not. The question is for those who are really still hell-bent on this and are looking at the next 5 to 10 years, what's the choice, the better choice between Tier 1, or, a market like Mumbai or Delhi, and Tier 2, where your capital investment is less? So you're very tempted. You think you can do this in 30, 40, 50 lakhs. And, you're hoping that at least over the next 10 years, it will give you handsome returns. Does it work out that way?
Well, appreciation in Tier 2 or Tier 3 markets have been very, very hopeless historically, and we are not really expecting it to change anytime soon, purely because the rate of urbanization also is once again bringing us back to these 2-3 metro cities where the people coming in hordes every year. It's only making a stronger case for these locations, and very little one for the rest of the Tier 2, Tier 3 cities. So to me, still it doesn't make any sense to, unless you are there and you're not looking at locating anywhere else, not changing your base anywhere, you're fine with, say, about 3-4% or 5% maximum returns, because these are once again markets where your rentals will also be highly, very, very rare to find in such locations where you don't have floating population. Rental market will be very, very small. So even that return will be very less. So your overall return on a property in such markets, very difficult to go over 5 to 6% per annum. So it doesn't really make too much of a sense to invest in Tier 2, Tier 3 cities, and especially if you are from Mumbai, definitely no ways. If you belong to that city, you may still want to do it, as you said, just to maintain some balance in your portfolio, not otherwise.
Okay, having said that, right now, with all of these problems and all of these caveats in place, which are the Tier 2 markets that are relatively better off than, the even more slow-moving ones?
Well, a few of these Tier 2 or Tier 3 cities are emerging. Actually, if I hope nobody takes any offense of I calling Ahmedabad as a Tier 2 market. That's one, or Kochi for that matter is yet another market. A few of these markets are currently looking good. Indore is looking good once again because the Delhi-Mumbai Industrial Corridor is putting up yet another investment region in close proximity to Indore. Bhubaneswar is looking good, and well, an emerging city can be, and well, it could be really a high punt, but then the new capital city of Andhra Pradesh, Amaravati, can be one, but then once again, nobody can actually put a timeline to it. If I can't construct a flyover or an airport in this country, then how about creating an all new city altogether? Could be a huge big punt, but then these are a few locations you may look at.
Okay, important there. And of course, as you're saying that, don't expect more than single-digit returns even from these markets, at least in the
lower single-digit, mid-single-digit is what I would say.
Though that's a very important statement to then keep in mind. Karthik, so, coming to you, and we discussed, rentals briefly earlier as well. What is the rule there? If you're looking at investments, what is your own thought on Tier 2 cities, and how critical are rentals in coming to that decision of whether this property investment is right or not?
In fact, Surabhi, it's largely the greed of earning a piece of land, one, and second, that this piece of land is going to be productive. Now, no one's really doing the mathematics there, but the whole idea is that let me buy a piece of property and I will earn something regularly from it. So it becomes like another source of income. Now, that source of income in your life, when you start off, might be 1% or 2%. Maybe 10 years down the line, based on the price that you bought at, your rental returns improve to about 4 or 5%. But if you look at it with the market price, it's still about 1 or 2% in a larger developed city like us. The dynamics change dramatically when it moves to the second generation. So very often what happens is over a 30 or 35 year, 40 year period, if the father has bought the property, let's say for 1 lakh rupees, today the children are enjoying a rental of 1 lakh rupees per month, which is enormous. So from the second generation point of view, as a legacy investment, it becomes a very interesting idea to have it. And, because you didn't have to invest for it and you're getting beautiful cash inflow month after month, year after year, so you're enjoying yourself. But again, don't go overboard, because if you have too much of it, you might have properties of 100 crores, which we have seen, but if you have to pay somewhere 5 lakhs, you're stuck, you don't know which property to sell then.
Liquidity. Extremely important to have that
extremely important to have
and in your bank account, of course. So, Ghulam, coming back to some thoughts, people also tend to get emotion somewhere, mixed in. So it becomes a lethal cocktail then, because you're thinking investment, but you end up then, wondering whether, you should stay in it or not stay in it. So how to be purely dispassionate and think of property only as a pure investment with the caveats being in place? And in that case, what's better, residential right now, or should you look at commercial also?
Well, I very firmly believe that passions should be kept back home when you're talking about investing in any kind of real estate asset. And the best case to highlight is those who actually invested in buying jhuggies and jhopadis in Mumbai or Delhi have made the killing. You bought a small jhuggi or jhopri somewhere in Mumbai, in Kurla or some such place for say a 10 lakh. Today a developer will be paying you 1 crore or 2 minimum to acquire that property. And that's something which you have to keep in mind. If you're
That's how fortunes are created, not by getting emotional.
100%. You get emotional, you say that I would want to buy a property wherein I could stay someday. Well, you're mistaken. You can't really buy a property thinking you may or may not stay in it. That completely confuses the whole spectrum. So I would rather say keep passions out, focus on buying a property, and who knows, even you have to buy a small jhuggi here or a jhopadi there, and you may see 20, 30, 40% of return per annum.
Okay, so what is the best, most dispassionate, clear, objective property buying decision for this year?
Well, I would buy a jhopadi somewhere in Kurla or Ghatkopar.
Okay.
Around the airport.
Brilliant. Well, that's an interesting real estate search for sure. Finally, your thoughts, Kartik, on this. I mean, some last thoughts, and also this aspect of emotions and how to make sure that you don't go wrong, because it's a significant capital investment you'll be making. If you go wrong, then it just sends the complete PF plan awry, right?
Completely, and it's very difficult to sort of undo it. It's extremely difficult. So go buy properties, but buy it with extreme caution. Never think about buying a property that, this is a 2-year or a 3-year kind of an investment, or even funding builders. Sometimes your principal itself can get stuck. So be very, very cautious. And whenever you buy a property, think that you're buying something for the next 15, 20 years. And as soon as you expand your horizon to 15, 20 years, suddenly the other assets class start looking much more attractive and much more interesting. So that's what I would want to say.
Okay, so Ghulam, last thoughts to sum everything up for those who are watching the show and are thinking of putting their money somewhere in this festive season. What would you say?
I would say much easier than anything else is buy a small shop, say about a 200, 250 square foot shop in any lane or by-lane or in the building where you're staying yourself. A, it is economical, you can buy on a small ticket size. B, rental returns are assured, and rental returns on shops are still closer to double digit. I would say 9-10% will be assured. And once again, liquidity of such assets is also easier because there are many people who would want to buy that. And hence I would say buying a small shop will make much more sense today.
Okay, so either a jhuggi or a shop, your options are very clearly spelled out on the table today. Thanks so much, Ghulam. It's great to have you on the show, and thanks, Kartik, for taking out the time as well. Great talking to both of you gentlemen. That's it from the Money, Money, Money team for this week, but our festive series continues. Keep it with us. We'll be discussing more asset classes as the weeks go by. Thanks for watching.